In this video, I'm going to show you the inventory equation. That's the beginning inventory plus purchase equals ending inventory plus cost of goods sold. I'm going to use an example to explain why this equation is correct. Suppose that this is the first year's operation for the business. So the beginning inventory balance should be 0. Suppose during the year they purchased 3 bags of items and each bag cost $10. So the total goods available for sale, that would be the beginning inventory plus purchase. So that equals 0 plus $30 equals $30. Suppose then we sold 2 bags. So the cost of goods sold should be $20. So the only 1 bag left in the ending inventory. So the ending inventory balance would be $10. So my total goods available for sale can be written in another equation. So that equals ending inventory plus cost of goods sold. That equals $10 plus $20 equals $30. Therefore, the beginning inventory plus purchase, that equals total goods available for sale equals $30, also equals to ending inventory plus cost of goods sold. Thank you for watching.